5 best trading strategies you need to follow in 2022. Welcome to Cryptogiant, and today in this video, you'll know all that you need to know about the best trading strategies you can apply. A disclaimer, this is not a financial advice. Do not make any financial decisions without doing your own research. And all views and predictions expressed in this video are personal research, opinion, and for educational purposes. And before we dive into the video, if you love content like this, make sure you smash a like on this video. Click the subscribe button, also hit that notification bell to be notified every single day when I come out with these new videos. The term day trading refers to the purchasing and selling of stocks on a regular basis throughout the course of a single day's trading activity. As defined by the Securities and Exchange Commission of the United States, day traders are those who anticipate that the value of the stocks they purchase will increase or decrease during the short period of time that the day trader holds that stock, which is typically only a few minutes or even seconds. As an investor, day traders seek bigger earnings from the stock market in exchange for much higher risk of losing their money over a short period of time. Those who believe in the power of compounding believe that if they utilize the proper day trading strategies, little daily wins will accumulate over time to yield big long-term returns. In addition to candlestick charts, day traders have evolved their own language, which includes anything from candlestick patterns to momentum strategies. Warrior Trading, for example, provides day traders with access to the support and strategies of internet communities like Warrior Trading. A high-risk endeavor, day trading should only be conducted by speculative investors who are willing to accept the possibility of losing the money they are putting at risk. For anyone considering a venture into the high-risk, high-stakes world of day trading, the following are some points to keep in mind. 1. Be aware of the dangers that may be involved. The 5 day trading strategies you'll learn about have the potential to be profitable if you put in the necessary effort and luck. If you want to make money rapidly by buying and selling stocks in a single day, you can try with them, but don't expect to be successful right now. Trading on the ebb and flow of the market. If an investor uses the momentum technique, he or she will purchase a stock whose price is growing at the time of purchase. In fact, according to Warrior Trading, only about 10 out of 5,000 companies would match the conditions on any given day. Momentum stocks are incredibly rare and tough to come by. Stocks with the following qualities should be avoided if you're using a momentum trading strategy. When the stock market experiences unexpected profits growth, a drug firm discovers a breakthrough treatment, or the announcement that a small company will be acquired by a larger corporation, inflationary pressure is created. An increase or decrease in the stock market of 30 to 40%. Equities with a smaller market capitalization that trade more swiftly due to a lesser number of outstanding shares, the float should be fewer than 100 million shares, should be favored over larger ones. Trading tools such as StockTwits, a financial communications platform, can assist traders in identifying trends or ideas for use in their momentum trading strategies. It is necessary to put a stop-loss order immediately below the first price decline in order to avoid experiencing significant losses in the future. Another way to put it is that the stop-loss function is similar to insurance. You place a sell order for a particular stock at a predetermined price, and if the stock quote falls below a predetermined level, the shares are automatically sold, preventing you from incurring further losses in the process. 2. A scalping strategy is a method of trading. One of the key ideas of utilizing a scalping strategy is that little victories can add up to a significant sum of money at the end of a trading day. This is one of the fundamental principles of using a scalping approach. Trading sessions are defined as periods of time during which the scalper sets buying and sell objectives and adhere to these levels throughout the trading session. When it comes to implementation and implementation time, scaling is the most efficient method. There are occasions when a large number of trades are completed in a matter of seconds, which is not uncommon. Succeeding in scalping is one of the most efficient day trading methods for traders who are confident in their ability to make quick decisions and act on them without hesitation. A scalper is someone who has the discipline to sell their positions as soon as they see a decrease in the market price. hence minimizing their losses to the greatest extent feasible. The following day trading strategy is not recommended for persons who are easily distracted or who are unable to keep razor-sharp attention for long periods of time. 3. A profitable strategy for taking advantage of pullbacks. Choosing a stock or exchange-traded fund, ET, that has been on an uptrend for a prolonged length of time is the first stage in using the pullback method. After that, keep an eye on the trend until the price begins to veer off course from the established one. A chance to buy at a lower price offers itself to day traders who feel that the established trend is higher when a downward price movement, also known as a pullback, occurs. Technical charts are used by day traders to determine the direction of a stock's trend. Fidelity recommends that investors wait for at least 2 consecutive high price moves before looking for a pullback or price fall to confirm the existence of an uptrend. A short position in the stock would require the stock to decline for 2 consecutive days before selling, on the other hand. Moreover, even if the trend fully reverses after you make your investment, there is no reason to be concerned because the trend frequently continues in the trending direction for a long period of time after you have made your investment. Stocks that have lately experienced the greatest gains in the stock market may be a good place to look for potential downturn opportunities. 4. Taking profits on the breakout. When the stock price climbs above the price of the prior peak resistance level, this is referred to as a breakout trade. Although the technique is more sophisticated than merely looking at a chart, detecting resistance, and then buying when a breakthrough happens, it is still rather straightforward. If you are trading stocks, you should keep track of the amount of trading volume, the number of shares that are changing hands. In order to explain this, Fidelity Investments explains that breakout transactions with high volume are more likely to be sustainable at the new higher price than breakout trades with low volume. It is more difficult to profit from smaller volume breakouts because they have a larger chance of reversing and dropping below earlier resistance levels. In most cases, after a stock has reached the resistance level, it will begin to decrease until a catalyst for a larger price movement is identified. The fact that there are more sellers than buyers over a specific price point prohibits the price from rising any further in the short term. 5. Trading based on current events. You may already be aware of the fact that the stock market reacts swiftly to fresh information that becomes available. A single disappointing earnings report can cause the price of a company's stock to plummet by a factor of several. Something else, such as the approval of a new medicine by the Food and Drug Administration, could cause a stock to soar in value. The most popular daily business news items may provide opportunities for day traders who keep an eye on the business news to profit from them by applying their knowledge of the market to their trading techniques. If there is unfavorable news issued about the company during the day, the stock can be shorted. This can be accomplished by loaning shares of stock from an investing company and then selling the shares that you have borrowed from the investment company, as described above. Alternatives include selling your shares at a lower price if the stock price decreases, as predicted, and reaping the advantages of the difference in value less a commission fee charged by the broker who handled the transaction. If the news is positive, you may choose to either go long on the stock or purchase the stock in its whole and sell the shares after the price has risen to a level that satisfies your expectations. On the website of the Securities and Exchange Commission, it is stated that day trading is extremely risky and can result in huge financial losses in a relatively short amount of time. If you want to gain some day trading experience, be sure that you only spend money that you can afford to lose in order to avoid financial ruin. There you have it. That was the entirety of this video. For more videos like this one, please like it and subscribe to this channel. Thank you for watching.